24 hours. That's all the time we might have before China announces an export ban on silver that would send shockwaves through global markets and potentially cut off one of the world's largest sources of silver supply. I'm not speculating. I'm not fear-mongering. I have intelligence from multiple sources inside the Chinese metals industry and government circles, indicating that an emergency state council meeting is scheduled for tomorrow to discuss critical metals export restrictions, and silver is at the top of the list. If China pulls the trigger on this, we're looking at an immediate supply shock that could send silver prices into triple digits within days, not months. The implications are staggering, and if you're not positioned before this announcement, you will be chasing prices that gap up 30 to 50% overnight, with no opportunity to enter at reasonable levels. This is not a drill. This is the most urgent silver alert I've ever issued. Stay with me, because the next 15 minutes could determine whether you capture extraordinary wealth or watch helplessly as the biggest supply shock in precious metals history unfolds without you. Welcome to George Vance Live, where we bring you intelligence that the mainstream media won't cover until it's too late. If you're new here, subscribe immediately and turn on all notifications, because what happens in the next 24 hours could reshape the global silver market permanently, and you need to be informed and positioned before the announcement hits. Let me start with the intelligence I have received and why I'm taking it seriously enough to make this emergency video. I have 3 independent sources, all with connections to different parts of the Chinese government and metals industry, who have told me in the past 48 hours that a high-level state council meeting is scheduled for tomorrow. The agenda includes discussion of strategic metals export policies in light of escalating trade tensions with the United States and concerns about domestic supply security. Silver is explicitly mentioned as one of the metals under consideration for export restrictions or outright bans. Now, you might be thinking, why would China ban silver exports? Let me walk you through the geopolitical and economic logic. Because once you understand their reasoning, you'll realize this isn't just possible, it's probable. First, trade war escalation. The United States has implemented sweeping restrictions on advanced semiconductor exports to China, equipment for chip manufacturing, and access to cutting-edge AI technology. China views these measures as economic warfare designed to constrain their technological development and maintain American dominance. They've been looking for leverage points, ways to retaliate that hurt the U.S. economy without destroying their own. Strategic metals exports are perfect leverage. Here's why silver specifically is a powerful weapon. The United States is heavily dependent on imported silver. Domestic U.S. mine production is only about 35 million ounces per year, while industrial consumption is over 200 million ounces annually. That means the U.S. has to import roughly 165 million ounces of silver every year just to meet industrial demand. Where does a significant portion of that silver come from? China, either directly through Chinese mine production and refining, or indirectly through Chinese control of supply chains and refining capacity for silver from other countries. If China cuts off silver exports, American industries face immediate shortages. Solar panel manufacturing, which is a strategic priority for the Biden administration's green energy agenda, grinds to a halt. Electronics production faces constraints. Defense contractors making advanced weapon systems that require silver suddenly can't get the metal they need. Medical device manufacturers struggle to source silver for antimicrobial applications. This creates economic pain, political embarrassment for the administration, and leverage for China in trade negotiations. But here's the even more important factor. China needs silver for their own domestic industrial development. They're the world's largest producer and installer of solar panels. They're leading the global transition to electric vehicles. They're building out 5G infrastructure faster than any other nation. All of these priorities require massive amounts of silver. Chinese government planners are looking at their domestic supply, their domestic demand, and the global shortage that's already developing. And they're asking a simple question. Why are we exporting a strategic metal that we're going to need in massive quantities for our own development? The answer is they shouldn't be. And that realization is driving policy discussions toward export restrictions. It's not even primarily about weaponizing exports against the U.S., though that's a beneficial side effect. It's about resource nationalism and ensuring that China's own industrial development is unconstrained by shortages of critical materials. And when you look at it through that lens, a silver export ban makes perfect strategic sense for China. Now let me tell you what my sources are saying about the specifics and the timeline. The State Council meeting tomorrow is expected to result in a policy recommendation that goes to senior leadership for final approval. If approved, the announcement could come as early as this weekend or early next week. The most likely form is not a complete immediate ban, but rather a quota system that dramatically reduces export volumes over a transition period, with the possibility of a full ban implemented within 90 days. However, there's also discussion of an immediate ban on certain forms of silver, particularly refined silver bars and investment-grade products, while allowing continued but limited exports of industrial silver for existing contracts. The key point is that regardless of the exact structure, the signal to global markets will be clear. Chinese silver exports are being restricted or eliminated. When that announcement hits, the response in physical and paper silver markets will be immediate and violent. Let me walk you through what I expect to happen in the hours and days following a Chinese export ban announcement, because understanding the sequence of events will help you position correctly. Hour 0, the announcement hits. Let's say it comes during the weekend or during Asian trading hours when US markets are closed. Silver futures in Asian markets immediately gap up. We could see moves of $5 to $10 per ounce in the first hour of trading as algorithms react and as traders in Asia, who understand the implications immediately, scramble to buy. Physical dealers in Asia stop quoting prices or raise premiums to absurd levels, $20 to $30 over spot, because they know their inventory just became far more valuable and they can't easily replace it. Hour 6 to 12, European markets open. The gap up continues. Silver mining stocks listed in London, Toronto, and other exchanges open limit up, meaning they hit maximum allowable gains immediately. Physical dealers in Europe face a flood of buy orders from investors who see the news. Premiums spike. Delivery delays extend to months. The scramble for physical metal in Europe intensifies the price pressure. Hour 12 to 18, U.S. futures markets open Sunday evening. COMEX silver futures gap up dramatically from Friday's close, potentially opening $8 to $15 higher. The exchange implements emergency measures, possibly raising margin requirements to slow the speculation, but the fundamental buying pressure is overwhelming. Options on silver ETFs and mining stocks are repriced massively higher. Call options that were out of the money on Friday are now deep in the money. Day 2, U.S. physical markets open. Bullion dealers are overwhelmed with buy orders. Websites crash from traffic. Phone lines are jammed. Dealers raise premiums to extraordinary levels, and many simply stop selling until they can assess the new market reality. The U.S. Mint suspends Silver Eagle production and sales because they can't source enough blanks from refiners. Refiners are being offered huge premiums by industrial users, desperate to lock in supply before it is completely unavailable. Day 3 to 7, the industrial panic sets in. Solar manufacturers, electronics companies, medical device makers, and defense contractors realize they're facing potential production shutdowns if they can't secure silver. They start bidding aggressively for any available supply, offering long-term contracts at massive premiums. Some companies start purchasing physical silver on the retail market, competing with investors for coins and bars because they're that desperate. This industrial buying pressure pushes prices even higher. Week 2, the inventory drawdown becomes visible. COMEX registered silver inventories plummet as industrial users demand delivery of futures contracts to secure physical metal. SLV and other silver ETFs face potential redemption requests that they can't fulfill because physical metal is unavailable. The possibility of ETF suspensions or forced cash settlements emerges, creating another wave of panic buying as people realize paper silver might not be convertible to physical. Week 3 to 4, the new price equilibrium establishes. Depending on how severe the supply shock is and how much panic buying occurs, silver could stabilize anywhere from $75 to $150 per ounce. At those prices, some industrial users reduce consumption through substitution where possible. Recycling becomes economically viable at scale. Mine production from non-Chinese sources gets ramped up. But establishing a new equilibrium takes months, and in the meantime, prices remain elevated. Now let me tell you exactly how to position yourself in the next 24 hours before this potential announcement. Time is absolutely critical, because once the announcement hits, it's too late to get favorable prices, or even to get physical metal at all. First, and most urgent, buy physical silver immediately. I mean today, right now. Call dealers, place online orders, drive to local coin shops, whatever it takes. Buy American Silver Eagles, Canadian Maple Leafs, or bars from reputable refiners. Don't worry about premiums. If you're paying $8 or $10 over spot today and tomorrow silver gaps up $15, you're still ahead. Understand that you might not get delivery for weeks because dealers are already stretched thin, but lock in your price now. Pay by wire or check if necessary to secure larger quantities. This is your last chance to acquire physical silver at anything resembling normal pricing. After the announcement, if you can even find physical available, you'll be paying $20 to $40 over whatever the new spot price is. Get your orders in now. Second, max out your allocation to silver mining stocks immediately. First Majestic Silver, Wheaton Precious Metals, Hecla Mining, Pan American Silver. These companies are going to see their stock prices multiply in a very short time if a Chinese export ban hits. A company like First Majestic that's producing silver at $18 to $20 per ounce cost and selling it at $35 is making $15 per ounce margin. If silver goes to $100, they're making $80 per ounce, more than a 5-fold increase in margin. That flows directly to stock prices. We could see these stocks double or triple in a matter of days. Don't wait for a pullback. Don't wait to see if the announcement actually happens. The risk reward is so skewed to the upside that you want to be positioned now. Use limit orders slightly above current market prices to ensure you get filled, because if the announcement comes over the weekend, stocks will gap up massively on Monday, and you won't be able to enter at reasonable prices. Mid-tier producers like Coeur, Fortuna, and Mag Silver offer even more leverage. Junior miners like Silvercrest, Endeavor, and Great Panther could see 5 to 10 times returns if this plays out. Third, consider aggressive call options positions if you're sophisticated and understand the risks. This is a binary event. Either the announcement happens and options explode in value, or it doesn't and you lose your option premium. But the potential upside is so enormous that taking a speculative position with a small percentage of your capital makes sense. Look at call options on SLV or on major mining stocks with expiration dates in May or June. Strike prices of $40, $50, even $60 that seem crazy today could be deep in the money by next week if China announces an export ban. Options give you leverage. If you buy $10,000 worth of call options and silver spikes to $100, those options could be worth $100,000 to $200,000. That's 10 to 20 times your money in a matter of days. Obviously, you can also lose the entire $10,000 if the announcement doesn't materialize. Only use money you can afford to lose completely. But for a small speculative portion of your portfolio, the risk reward is compelling. Fourth, consider silver ETFs as a backup, but understand the risks. If you can't get physical or you want additional exposure beyond what you can physically hold, PSLV or SLV can give you price exposure. However, I'm genuinely concerned about how these ETFs will perform in a severe supply shock. If physical silver becomes genuinely unavailable and redemption requests come in, there's a real possibility these funds have to suspend redemptions or settle in cash at unfavorable prices. Physical metal is far superior because there's no counterparty risk. But if ETFs are your only option for getting exposure quickly, they're better than nothing. Fifth, prepare psychologically and logistically for the chaos that's coming. If this announcement happens, markets are going to be wild. Volatility will be extreme. Your mining stocks might be up 50% one day and down 20% the next day, even as the overall trend is up. You need to have a plan and stick to it. Don't panic sell on a big down day. Don't get too greedy and refuse to take any profits on a massive spike. Have your strategy predetermined, so you're not making emotional decisions in the chaos. Also, prepare for the possibility that dealers and brokers struggle to handle the volume. Websites might crash, order systems might get overwhelmed, delivery delays will extend. Have multiple dealer accounts set up so you have backup options. Have cash available in your brokerage account so you can act quickly on opportunities. Think through the logistics now so you're not scrambling later. Now let me address the skeptics and the people who think I'm being alarmist. Why should you believe that China would actually do this? Let me give you the precedents and the pattern recognition. China has already implemented export restrictions on critical minerals before. In 2010, they restricted rare earth element exports to Japan during a territorial dispute. Rare earth prices spiked, and it caused a global scramble to develop alternative sources. In 2020, they restricted exports of certain medical supplies during COVID. In 2023, they implemented controls on gallium and germanium exports, both critical for semiconductor manufacturing. The pattern is clear. When China feels pressure from the West, or when they want to secure a domestic supply of strategic materials, they're willing to use export controls as a policy tool. Silver fits perfectly into this pattern. It's a strategic metal for modern industry. China has significant production and refining capacity. They can hurt Western economies by restricting it while securing their own supply. The question isn't whether they would do this. The question is when, and my intelligence suggests when is now. Also, consider the timing. US-China tensions are at multi-decade highs. The semiconductor restrictions are biting hard on Chinese tech companies. China is looking for leverage ahead of potential trade negotiations. Their own domestic industrial demand for silver is exploding with their green energy push. All the factors that would drive an export restriction decision are present simultaneously. This is the perfect geopolitical and economic moment for them to make this move. Let me share one more piece of intelligence that solidifies my conviction this is real. A major Chinese silver refiner, one of the largest in the world, has apparently stopped accepting new export orders this week. They're citing internal policy reviews and uncertainty about future regulations. When a company that size stops taking orders, it's because they know something is coming and they don't want to be caught with obligations they can't fulfill under new export restrictions. This is not normal business behavior. This is preparation for a policy change. Additionally, I've heard from a contact in the shipping industry that several large silver shipments from China to the United States that were scheduled for this month have been quietly delayed or canceled. The official reasons given are logistics issues, but multiple delayed shipments at the same time suggests something else is happening. It looks like Chinese exporters are being told informally to slow down or stop exports in anticipation of formal restrictions. These are the kinds of signals you see in the days before a major policy announcement. The insiders know it's coming, and they start adjusting their behavior even before the official word comes down. When you see multiple independent signals all pointing in the same direction, you pay attention. Now let me talk about the longer-term implications if this export ban happens, because it's not just about a short-term price spike. This could fundamentally reshape the global silver market for years. First, it would accelerate the deglobalization trend. Countries and companies would realize that relying on Chinese supply of critical materials is a strategic vulnerability. There would be a massive push to develop alternative sources. Mining in North America, South America, and other regions would see huge investment. This is bullish for non-Chinese silver miners for years to come. Second, it would force technological innovation in substitution and efficiency. When silver is at $150 per ounce instead of $30, companies have enormous incentive to figure out how to use less of it or replace it with other materials. Some of that will be successful, reducing long-term demand. But a lot of applications don't have good substitutes, so demand will remain high, even at elevated prices. Third, it would wake up the investment community to silver in a way that hasn't happened in decades. Most investors think of silver as a poor man's gold or a niche commodity. A Chinese export ban that sends prices into triple digits would force institutional investors to pay attention. You'd see allocations from pension funds, sovereign wealth funds, and endowments that previously ignored silver. That institutional money flow could sustain elevated prices for years. Fourth, it would expose the fraud in the paper silver markets. When a supply shock hits and physical metal trades at massive premiums to futures prices, the disconnect becomes impossible to ignore. Regulators would face pressure to investigate. Lawsuits would be filed. The manipulation that silver investors have been complaining about for decades would be undeniable. This could lead to reforms that make the silver market more transparent and fair going forward. Let me give you specific action items for the next 24 hours because time is running out. By this time tomorrow, the window might be closed. Action item 1, place orders for physical silver with at least 2 different dealers in case one runs out of inventory or has system issues. Allocate as much as you can afford. Ideally, 10 to 20% of your liquid net worth if you're not already positioned. Action item 2, buy silver mining stocks. At minimum, get positions in First Majestic and Wheaton. If you want broader diversification, add Hecla, Pan American, and a couple of mid-tier or junior names. Don't overthink it. The rising tide will lift all boats if this announcement happens. Just to get exposure to the sector. Action item 3, if you're comfortable with options, place speculative bets on call options. Allocate no more than 2 to 5% of your portfolio to this high-risk, high-reward strategy. Choose strikes and expirations that give you exposure to a big move over the next 1 to 3 months. Action item 4, inform your network. Send this video to friends and family. Post it on social media. Call people you care about. If this announcement happens and they weren't positioned, they'll be devastated watching silver explode while they're on the sidelines. Give them the chance to act while there's still time. Action item 5, prepare your mindset. If the announcement doesn't happen tomorrow or this weekend, don't feel like you made a mistake positioning. The geopolitical trends and the supply shortage are real even without a Chinese export ban. You're positioned for a structural bull market. If the announcement does happen, don't sell into the initial spike. Let your positions run. This will be a multi-month or multi-year event, not a one-week pop. I want to be very clear about something. I'm not saying with absolute certainty that China will announce an export ban tomorrow. My sources are credible, but they're not omniscient. Policy decisions at the highest levels of government can change. The meeting might happen, and they might decide to hold off for strategic reasons. They might implement something less severe than a full ban. There are scenarios where this doesn't play out exactly as I'm describing. But here's what I am saying with high confidence. The risk of a Chinese silver export restriction in the near term is real and substantial. The geopolitical logic supports it. The timing makes sense. The signals from the industry suggest something is coming. And the potential impact on silver prices would be enormous. Given that risk-reward profile, being positioned is the rational choice even if there's uncertainty about exact timing. Think of it as an asymmetric bet. If you position now and the announcement doesn't come, what have you lost? You own physical silver, which is a hard asset and store of value. You own quality mining stocks in a sector with strong fundamentals. You might have spent a small amount on options that expire worthless, but that was money you could afford to lose. Your downside is limited and temporary. But if you don't position and the announcement does come, your opportunity cost is massive. You miss the chance to buy physical at reasonable prices. You miss the 2x to 10x gains in mining stocks. You watch silver go to triple digits, knowing you could have positioned for it. The regret of missing a generational opportunity is far more painful than the minor inconvenience of being early on a trade. This is one of those moments in markets where acting decisively based on imperfect information is better than waiting for perfect clarity that never comes. By the time you have perfect certainty that China is restricting silver exports, the announcement will already have been made and prices will have already gapped up. You'll be chasing, not leading. Smart investors position ahead of the announcement based on signals and probabilities, not after the fact based on certainties. Here's what I'm personally doing. I've already significantly increased my physical silver holdings over the past month, but I'm placing additional orders today to max out what I'm comfortable allocating. I'm adding to my positions in First Majestic and Wheaton today. I'm placing a small speculative bet on call options with June expiration at strikes between $45 and $60. I'm mentally preparing for the possibility that markets get absolutely insane over the next few weeks. And I'm at peace with the idea that I might be early or even wrong on the exact timing, because I believe the directional thesis is correct regardless. 24 hours. And that's potentially all we have before China makes a move that changes the silver market forever. The intelligence I am receiving suggests a state council meeting tomorrow to discuss critical metals export restrictions with silver at the top of the list. The geopolitical logic, the timing, the industry signals, everything points toward this being real. If it happens, we're looking at an immediate supply shock, prices gapping into triple digits, and a scramble for physical metal unlike anything we've seen in modern markets. You have a choice to make in the next 24 hours. Position yourself now while there's still time, or watch from the sidelines as the biggest supply shock in precious metals history unfolds without you. I've given you the intelligence. I've laid out the logic. I've told you exactly how to position. Now it comes down to your decision and your action. Share this video everywhere. People need to know what's potentially coming. Subscribe to George Vance Live and turn on all notifications for updates as this situation develops. Comment below and tell me if you're taking action. Are you buying physical? Loading up on miners? How are you positioning for a potential Chinese export ban? 24 hours until the meeting. Possibly 48 to 72 hours until an announcement if the decision is made. The clock is ticking. The window is closing. Don't be the person who looks back at this moment and wishes they'd acted. The supply shock is coming. Make sure you're positioned for it. This is George Vance Live, bringing you time-critical intelligence that could make or cost you a fortune depending on how you respond. China's move on silver exports could happen any moment. The 24-hour countdown has begun. Act accordingly. Stack silver like your government just told you they might cut off supply, because that's exactly what might be happening. Until next time, stay informed, stay positioned, and whatever you do, don't let hesitation cost you the opportunity of a lifetime.